Drug use is going up. Obesity is a problem. Diabetes is a problem. A lot of areas are just totally depressed. There aren't any jobs around. People don't have the resources to necessarily pick up and move. I remember in the 1980s, there was a migration from Detroit to Dallas. People just got a U-Haul and moved to Texas and got another job. That's harder to do now, not just a question of having the resources. There are plenty of jobs in Austin, but they're high-tech jobs. You do need an engineering degree or something like that to jump on board there. The quality of the jobs, the lost opportunities, the depressed area, drug addiction, demographics, all these things come together, and people just say, you know what, I'll sit on the couch in front of my widescreen TV and watch a football game, and maybe a relative has a job or someone else is paying the rent, or you got some government choose legal immigration with an H-1B visa or some other visas. And yeah, if you're an engineer from India, come on in, you'll get hired before you're off the plane. But that's a limited number, and those aren't really creating jobs for Americans. They're creating jobs for Indians who got an engineering degree. But that's relatively small compared to the whole. Most of the immigration is the opposite. They're coming through the Mexican border. They're pretty much impoverished, and they're not all Mexicans, by the way. They're from Guatemala and El Salvador and Nicaragua, and actually all over the world. If you can get to Mexico, you can probably get into the United States. Those people are not getting jobs in Huntsville. They're either dependent on the state or, landscaping jobs, waitress jobs, maybe babysitters, et cetera. And again, let me be clear, there's dignity in all work. So I'm not disparaging, prefer legal immigration. I'm not disparaging people who do what they have to do for themselves or their families. And I'm not disparaging that type of work. What I'm saying is that those jobs do not have high salaries. They do not have benefits. They're not going to lead to particularly high growth or higher consumption. Maybe in the next generation, that's fine, but not now. So we have the most recent data, and it shows what I'm describing. There's a mass migration out of New York, Los Angeles, San Francisco, Seattle, Chicago, Philadelphia, and Baltimore, and a few other cities. And the people are going to Phoenix, Scottsdale, Miami, Nashville, Portsmouth, New Hampshire, Boulder, Colorado, Denver, and a few other places. And part of the reason is climate's nice, but there are jobs there, but the taxes and the crime. You didn't have the kind of rioting and destruction that you saw in New York and Seattle and Portland. You don't see that in Phoenix and some of the other cities I mentioned, or Miami for that matter. So whether it's high crime, high taxes, density functions, lost jobs, or whatever, there is this massive migration, which is interesting because in certain sectors, residential real estate is doing extremely well. Usually residential and commercial kind of move together based on interest rates and economic cycles. They can go up together or down together in a recession. But right now there's a bifurcation. Residential real estate in the destination cities and suburbs is going up very strongly. Commercial real estate is nowhere near the bottom. It's just going to get worse. But I would simply make the point that the reason commercial real estate is down across the board, even in stronger cities like Miami and Phoenix, that's suffering. And clearly the exodus cities, as I call them, New York and Seattle and others, are suffering even more. A lot of that has to do, some of it has to do with crime in the streets and the mayors and all that, yes. But a lot of it has to do with the work from home environment, which very few large companies would have said, hey, I think everybody can work from home. We'll figure it out. We'll get some software or whatever. Nobody was saying that. But in the pandemic and the shutdown, they had no choice. You had to work from home because of the lockdown. Turns out it worked pretty well. There are pros and cons. We all get a little tired of living on Zoom. A little personal contact is socializing is a good thing for your mental health. But that aside, from a purely business point of view, the work from home model still works. So if you had 10 floors of a midtown office building, prime location in New York, and they're vacant because everyone's working from home, you're not going to go back to 10 floors. You might go back to 2 floors. You might have a locker room, not like we had in high school, but like a nice facility with a lot of attractive office space where people can basically reserve the office. So you're working from home, you call up, say, hey, I need an office and a conference room 2 days next week. And you book it, it's yours. You come in, you open your locker, there's a laptop and a sport coat and a tie or whatever you need, nice scarf, and you go sit in the office and you do your business. And then you go back and work from home. If that's the environment where everyone, it's not quite like, it's a kind of office sharing, but it's not WeWorks in the sense that everyone's crammed in together. You could have a nice facility But if it's always temporary and always rolling over, you only need 2 floors instead of 10 floors. So first of all, that slams the landlord, but the ripple effects are huge because it's not just that. It's, okay, what about commutation? What about public transportation, food trucks, restaurants, cleaning staff, maintenance staff, shopping? It's all the things that surround people coming to cities and working in fairly dense environments. And it's not coming back because the model's not coming back. We're a long way from the bottom. I understand what the stock market's doing. I would say, again, S&P 7, not the S&P 500. And whether that's a bubble, I don't want to go short Tesla right now. You probably getting run over by an 18-wheeler, but I don't want to buy it either because I do see it as a bubble, something that's going to reverse fairly severely once this new stage 2 of the recession sinks in. But again, commercial real estate and small and medium-sized enterprises, including a lot of retail, which is half the economy, have been slammed and are not coming back quickly. Go back to 2009. Between late 2008 and 2009, the Federal Reserve expanded its balance sheet from about $800 billion to something just under $4 trillion. So they increased it by the 300%. And everyone's like, oh my goodness, they're printing all this money. We're going to get inflation. And we didn't have inflation for 10 years. The money supply has nothing to do with inflation. Milton Friedman was wrong about that. The Austrian school was wrong about that. The neo-Keynesians are wrong about that. Inflation is not caused by money printing. Inflation is caused by velocity of money. It's the turnover of money. So you can take the Fed balance sheet, but it's not necessarily inflationary unless you get the turnover. So I'll give you a simple example. Let's say I go out to dinner and I tip the waiter, and the waiter takes the tip money and takes a taxi or an Uber home, tips the driver, and then the driver takes the tip money and puts gas in his car. My $1 had velocity of 3. It supported $3 of goods and services, the restaurant tip, the taxi tip, and the gas. But what if I stayed home and watched TV? Then my money has velocity of 0. I didn't spend my money. There was no turnover. If you think the stock market is inflation, I can call it an asset bubble. Yeah, stock prices are going up. That's not inflation as economists and policymakers understand it. Those are just asset bubbles, and they are happening. You can print money, but that's not stimulus. You can run deficits, but that's not stimulus. Stop calling it stimulus. You can call it deficit spending if you want. You can call it money printing if you want, but it's not stimulus. It doesn't stimulate anything. Yeah, I think I have about 30% cash, which sounds high to most people, but we already explained that. I'd have 10% gold or gold mining shares. There's room for residential real estate. We talked about that. You need the right fund manager, but there's a way to do that. Some for alternative investments. I have some money in some venture capital and startup type companies. They're risky, but they can be very attractive depending on the management again and the business plan. There's room for listed equities, but I wouldn't have more than about 20% or so in the stock market. People say to me, Jim, you've got 10% in gold. How can you sleep at night? And I go, you're 90% in equities. How can you sleep at night? Because that's really the risky asset class.